So it all starts back right before the pandemic in early 2020. What happened was U.S. Steel was going to replace the Mon Valley plant. This is very important to keep in mind. This plant has been in operation since the 1900s and has a hot strip mill that has been replaced since 1942. So the same hot strip mill that's been creating steel out of pig iron since 1942 has been running nonstop since that day. When they came to Allegheny County, and the mayor, the county commissioner, and said, "Hey, we are going to, out of our own pocket, fund a new plant that has the first one in North America that will be net carbon neutral, electric arc furnace, that will be able to produce Verdex green steel in North America that is not only net carbon neutral, but profitable and keeps union jobs in Pittsburgh." Sounds like a no-brainer for everyone involved, right? You have a plant that is infamous for polluting, that the locals don't really like, and you'll be able to turn that area into a better one over time by, dumping roughly $7 billion into it to make it a profitable plant that is net carbon neutral to create automotive steel that it's never been able to do before, because it's used to be only able to create consumer grade steel like you'd find in, your Whirlpool refrigerator or something. Well, this great plan was given to the county commissioner, and he sat on it for 8 months, and then the pandemic hit. And when the pandemic hit, what happened was the governor of the time decided that this project will not be allowed to go through during the pandemic whatsoever. Now, when you're the CEO of U.S. Steel and you think that you have a great business idea and the local government has become very hostile to that action, of course what you're going to do is shop it around. And shop it around they did. And he called dozens of different governors, and the governor of Arkansas came on the phone and said, "Hey, we have this land here. You can buy it, and we'll finance it to you for free." And they're called green bills. Now, green bills are essentially bonds that are loaned at 0% interest. And these are very key to everything moving forward, because basically it allows U.S. Steel to build this $3 billion plant in Arkansas on top of the one they just bought in Arkansas for free. They get to finance this entire project for free. No interest. When you're evaluating business decisions, cost of capital eats into your margins pretty big, because 6% to 10% depending on your credit rating. So suddenly this deal turns into one of the greatest trade deals of all time within the steel industry, because U.S. Steel is able to buy Big River Steel and then build Big River Steel 2 right next to it, doubling the capacity at the same price of it. So they spend around $6 billion, and they're able to finance it all very cheaply. At the same time, they're able to capitalize on the very high steel prices, $1,400, so they have this high EBITDA cash flow margin generation that they haven't seen in a long time. So the company's doing very, very well at this point. Now, there is an incentive for these new facilities to be built as quickly as possible, because they're not using union labor. They're using non-union labor. Well, why is this important? Well, the reason this is important is that the union has guaranteed raises in their contracts, and they're very stubborn to negotiate with. Now, you may be wondering, well, if the business isn't doing well, then shouldn't the union be smart enough to know that and be better at negotiating? Well, that would be a valid criticism and critique. But that's not ever the case, because the union is controlled by our biggest competitor, Cleveland-Cliffs. Now, you may be wondering, well, how can a union be controlled by a competitor? Well, unions can sign over their bargaining rights, and Cleveland-Cliffs controls most of the blast furnaces in North America. So when you think of pollution ruining the environment, the best place to do that is a blast furnace. And that is the non-electric arc furnace, non-net carbon neutral. The blast furnaces are the place where you do that. They still need to exist, however, because that's the only way you can create the A-pillars within your car and other high-end strengths and steels like you'd use for, drilling oil into the ground. That high-end stuff, that has to be very strong. But that's neither here or there. So circling back to Cleveland Cliffs. So after 2020, they control the rights to negotiate for the union on their behalf. And since they have the most blast furnaces, they employ the most United Steelworkers, they control the union. So what happens is that the second to last week of my internship, Cleveland Cliffs try to do a hostile takeover of U.S. Steel. You may be wondering, well, what is a hostile takeover? Well, for publicly traded companies, hostile takeover can happen at any time. It's basically when a competitor, against your will, just starts buying up shares to your company. And this is a huge problem for U.S. Steel because the last thing they want is their biggest competitor to buy them, especially because they're a very poorly run firm. They are also smaller than U.S. Steel. They have high liquidity problems. They have outdated assets. They are very much just looking to grow as much as possible, and they're racking up huge amounts of debt, and their credit rating sucks, and they're a very poorly managed company for a plethora of reasons. But the main point of the issue is they're a dying corpse of a company that is stretching all its credit limits just to make a last hurrah so it doesn't have to file Chapter 11 in the next year. So their Hail Mary pass was buying U.S. Steel so it looks good to investors to push their stock price up. Well, what happened was that the people in charge at U.S. Steel saw that Cleveland Cliffs was buying up shares, and they were concerned that, okay, we don't want to go to Cliffs because Cliffs sucks, and there's other companies like Nucor, Steel Dynamics, Commercial Metals, CMC, Reliance Metals, S-Mark, Nippon Steel, ArcelorMittal, all these other metal producers based in North America that would buy us at probably a better price than what the stock's trading at $32 because we think we're undervalued. So basically the board went out and they started shopping themselves out to different companies, and S-Mark made a bid. There was a couple other bids that were rumored to actually have gone through, but at the end of the day there was two final bids. Cleveland Cliffs bid at $50 a share, and Nippon bid at $55 a share. Well, over the scale of the shares, the two offers ended up being Cleveland Cliffs at $7 billion, Nippon at $9 billion. That's a pretty big difference from a valuation standpoint. And the shareholder value standpoint, of course you're going to pick the bid that has more money in it, right? Like, you would be an idiot to say, hey, I'm going to pick, if I'm going to, do something and get paid, I'm not going to take $50 over $55. Especially in this case, that $50 wasn't truly $50. Most of it was a stock conversion from U.S. Steel to Cleveland Cliffs stock. And Cleveland Cliffs stock, if you don't know, has been down 15-20% over the year. And the last third was in cash. And all that cash was due to heavy debt. So if we did get bought by Cleveland Cliffs, it would just be a huge money pit where basically they're using the proceeds of U.S. Steel just to pay for the acquisition of itself. So thus the dying assets that we talked about earlier can't be fixed because the money's being spent to pay off the bank. So clearly, for the long-term health of the business, Cleveland Cliffs deal was just never going to be accepted. I mean, it just made no sense, and it was a pretty poor decision by Cleveland Cliffs to think that their bid was going to get accepted. And they're pretty salty about this. So salty to the point where their CEO would come out and call our CEO's personal slander, said our company was run by McKinsey, and while simultaneously he'd say a couple other things like we violated antitrust laws, yada, yada, yada. Well, that's neither here nor there, but this is important to keep in mind because, as you know, these people control the union. Well, when we accepted the Nippon bid, that same day we did publicly, the union came out and said they accept the Cleveland Cliffs bid, and that is the only bid that they will accept. Here's the problem. The union has no legal ramification or justification or precedent or laws within the negotiation of itself to accept or deny a bid on behalf of U.S. Steel itself. So what does that mean? Well, the union can say they endorse a bid, but that's all they can do. There's no power. They have no power within the company to make that decision itself. So the union itself had no power, legally speaking. However, they had power politically. And because of the fact they had Cleveland Cliffs on their side, and Cleveland Cliffs was like, hey, you got to stir up, make sure this deal doesn't happen, because if this deal goes through, it'll kill our business long term, because our biggest competitor is just getting stronger and better. They're going to invest in their facilities, and they're going to kill us. So we need to kill them. So how do we kill them? Well, we make sure the deal doesn't go through. So how do we make sure the deal doesn't go through? Well, it's very simple. You have 300,000 workers just in Pennsylvania themselves. That's a swing state. You have Indiana, hundreds of thousands of steel workers, swing state. And then you have Michigan. There's heavy U.S. Steel presence in Michigan, swing state. Cleveland Cliffs and U.S. Steel, they're both in Alabama, swing state. Most important election of all time, 2024. So you're sitting on this, what should be a power vacuum of voters that vote in line with their union director, which in reality we all know that's not the case. They all vote independently. And the union became a bargaining chip politically when it came to dealing with this election. So what happened was President Joe Biden endorsed blocking a deal because he wants to agree with the union. While simultaneously, Donald Trump comes out and says, hey, I'm going to block the deal as well. The only thing those two guys agreed on was blocking this deal. And when Kamala came in to run the race, she endorsed blocking the deal as well because, U.S. Steel can't be foreign owned. There's just a couple problems that inherently exist, though, by blocking this deal. And the first and most obvious one is that, well, if you're blocking this deal, you're basically saying that Cleveland Cliffs bid should be accepted. Well, if Cleveland Cliffs bid is accepted, you'd create an antitrust lawsuit from all the automotive manufacturers because only two companies within the United States manufacture the high-end automotive steel that is required to create certain car parts. And that would be considered a monopoly, just like the one they broke up in the 1900s, like old U.S. Steel. So we would have gone full circle in consolidation of the steel industry, which would have been pretty hilarious from my perspective because it's, gone full circle, the whole thing that we, broke up then it would be over. The other problem would be, the layoffs. Cleveland Cliffs and U.S. Steel are very similar. There'd be, there was $300 million of synergies, which is a fancy term of, calling layoffs. So $300 million worth of layoffs, of course, would not be, beneficial for the people of the plants in those areas. They would really just keep on the people who work day to day in those plants without investing further into the capital in them themselves while choosing which facilities to de-invest in themselves and just sell those assets. That's where those synergies came from. They would just lay people off, shut down plants, that sort of thing, because the way the U.S. steel market works is that the capacity there's more supply than demand. That's why steel prices suck. So what they would have done is just shut down plants to drive the steel price up so they make more money. That's what they would have done. The second biggest problem with not having the deal go through is that the investment. Nippon pledged $3 billion in total to revitalize the steel plants. And as we told you, the Mon Valley plant has been updated since World War II. Gary Works needs a brand new furnace. That's $1 billion. Nippon was going to fix it. And the big thing here is that those are union jobs. Like, those are the two union facilities left at U.S. Steel. And if you talk to any one of those people who work at the plants, they want the deal to go through because they know U.S. Steel doesn't have the money. Okay? Like, no one else has the money. No one else is going to throw $1 billion at this stuff because long term it's not very profitable because the steel prices at the beginning of the deal and off COVID, they're around $1,400 a ton. Now they're about $660 at best, more around $600. Well, this is a significant problem. And you have a union that's guaranteed a 6% raise, and the break-even VCM is not even being achieved. So what does that even mean? Well, your labor on your variable cost perspective before, overhead, fixed salaries, just your pure variable costs of materials and labor, when you run it through the mill, is higher than your proceeds in general. you will just be hemorrhaging money as a business. And there was points in time where U.S. Steel was losing over millions of dollars a day. And the problem is you keep those stagnant union facilities open unprofitably. Long term, the business is going to be in complete jeopardy because the creditors will come knocking on the door at some point. So without these investments to make the plants more efficient and properly maintain them, because it takes a lot of money, in a time where the business needed money the most, the leaders of the union and our wonderful president decided that it was in the best interest to placate the competitor over U.S. Steel itself and basically choose foreign companies to produce steel than American-based. Because the fact of the matter is, the capacity will not be replaced domestically whatsoever. The union jobs will be gone. The jobs in Pittsburgh will be gone. Because what happens is you have around 20 million tons of steel can be produced in America itself. Well, you take away Gary, that's 3 million. Take away Mon Valley, that's 2. So there you lose 5 million tons of steel, and you lose 5 million tons of steel produced by union jobs. What did we really accomplish here? Well, we consolidated the market, and it may drive the price of steel up more. Well, no, it won't, because you created laws and tariffs that have not been supported well enough, even though trade cases have happened. So the fact of the matter is, you have this situation where China can produce steel with slave labor at basically $0 a ton because their economy is terrible, their construction market doesn't exist. They're just dumping steel into Mexico, and Mexico takes the Made in China sticker and slaps the Made in Mexico sticker on it. And thanks to the North America Free Trade Agreement, they can dump it in the market and make a lot of money on it, and they'll sell it for whatever price because they don't care. They're going to be making bank. So what happens is these American companies, they don't care about the quality of steel. They don't care where it comes from. They don't care if it's American. They just want the cheapest thing possible. Because they want the cheapest thing possible, they don't care if it's net carbon neutral. They just want the price. So that's why you say, oh, well, someone will replace it. No one will replace it. They'll just get it from China with slave labor. I mean, that's what the market says it wants. It just wants the cheapest thing. So even though they're arguing for, being net carbon neutral, creating all these other things, it's never going to happen because the market will just take the cheapest thing. They don't care about pollution. They don't care about saving the environment. They don't care if, 200 people died just to create this 1 ton of steel. They don't care if it was shipped across, the entire ocean. They just want the cheapest product possible. And when you're doing a market like that without adequate protection, it creates a problem when you're the domestic manufacturer because you're always going to be behind in the race. Well, how do you catch up? Well, if you're U.S. Steel, the way to catch up was to create Big River Steel, which was a 6 million ton capacity plant in Arkansas that's non-union. Well, the great thing about this plant is that it's non-union, so it's going to be a lot cheaper. Well, with the way the market is, you're going to just replace your existing capacity. Well, if you're U.S. Steel, the deal doesn't go through. What do? Well, you just shut down your unprofitable union plants and, of course, ramp up production in your profitable net carbon neutral plants and move everything down to Arkansas. I mean, why wouldn't you? I mean, Pittsburgh doesn't love you. Illinois doesn't love you. Clearly the U.S. government doesn't love you. So you got to find your own enclave to be healthy in and to survive in. So that's what they're going to do. They'll shut down the plant and everyone's going to be like, oh, how'd this happen? Well, it's because, the people in Washington were too ignorant. And it doesn't make much sense because, in theory, this should never have happened. You see, CIFAS is the government organization that is in charge of these deals. And what they do is what they call a judicial review on the deal itself from a security perspective. So what does that really mean? Well, they're an executive branch organization, so they're an extension of the president. So they're supposed to nonpartisanly, unbiasedly look at the deal for all that it is and make a decision on, will this affect U.S. security or not? And I've only directed 7, now 8 deals in the history of its existence. Majority of all but one were Chinese cybersecurity companies buying American cybersecurity companies. Oh, wonder why those got rejected. The other one was AT&T selling itself to AT&T Canada. Why they reject that? Well, that was a massive tax loophole they were trying to exploit. Okay, so CIFIS has a track record of honestly being unbiased and pretty objective at approaching things from a I would say, partisan perspective and a non-political perspective. So when approaching this deal, there's a couple things you should keep in mind. U.S. Steel is the 4th largest capacity producer of steel in North America from a melting perspective. They are significantly smaller than Nucor, Steel Dynamics, and the other ones ahead of them. When Nippon would buy U.S. Steel, it would make Nippon, in the world, it would go from the 3rd to the 2nd biggest producer, behind 2 Chinese companies that use only slave labor. The risk that CIFIS said that was presented was security. Now, there's a couple interesting things when you cite security as your problem. First of all, currently the United States government does not buy any steel from U.S. Steel, from a third-party processor or any of that. No, none of the steel USA makes ever ends up in the hands of the United States military. That is a fact, okay? So from saying, oh, if we go to war or if there's, a ramp-up, well, they would just do what they did in 1942, and that's just seize all the assets and, take over the contracts and take over priority. That's what they've done in the past. You're acting like Japan is a threat. I mean, they've been an ally of us since 1949 and have a great track record. So saying it's a security risk is complete and utter nonsense. Well, then the other argument was that it was a market security risk, that you're putting the steel market itself in jeopardy, the domestic market, by having this deal go through, because Nippon's such a big power player. Well, that's not the case whatsoever. Nippon has 2 plants in the United States. They're both processors, and if you just, from a processing standpoint, they're not even top 50 processing size of just steel. They're very small in the market. And one of them is a joint venture, which means they only own half the plant. And they promised to de-invest from the joint venture itself to help make the deal go through. So they literally only had a other plant in North America besides, U.S. Steel itself. And they also promised to make U.S. Steel a North American company still. So it would be registered as its own subdivision within America, as its own American small corp. That would be a board of literally 9 Americans and 1 Japanese person. So to say it wasn't going to be an American company anymore was utter and pure nonsense. So they cited that it would be a risk from the market perspective, like dumping, other stuff like that. Well, it is true that Nippon Steel has significant presence in China and India. They promised that they would not import any steel from those plants into North America for the entirety of the time they would own U.S. Steel, which would be pretty significant because that would cut a major supply line and a major incentive from Nippon's perspective, because that would actually probably be the most profitable thing. If I was in charge of Nippon, I'd buy U.S. Steel and just slap the sticker of China on it and say, hey, made in America, and just upcharge everyone, because if you could produce steel at slave labor prices through a joint venture, why would you produce steel in America? That's not very hard whatsoever. If you were really smart, that's what you would do. And they promised not to do that. So they promised to kill their most powerful revenue stream, keep it American, invest in union facilities, $3 billion. So, it was going to be around a $12 billion investment total from Nippon into U.S. domestic manufacturing. And let's think about that. Who's going to put $12 billion into domestic American manufacturing? No one. So CYFIS had all these facts, and, CYFIS is supposed to be impartial. They're supposed to see things objectively, and, that wasn't the case, clearly. They looked at all the parts of the deal, and they said, you know what, I can't make a decision. And when CYFIS says they can't make a decision on a deal, it goes to the desk of the president. He gets to decide if the deal goes through. So Joe Biden has decided, as one of his last acts of business as president, to block the deal. Because it needs to remain American-owned, according to him. Too much of a risk. Well, you have all these idiots on the internet saying, oh, it's a great win for the union. Oh, it's a great win for American security. If this deal doesn't go through, I've been in those meetings. I've seen those reports. Within 5-10 years, U.S. Steel will not exist in Pittsburgh or Chicago. It probably won't. Unless there's substantial CapEx investment from them, they're really not incentivized to be here whatsoever because they have these dying assets, no tax breaks that all these other companies are getting, and they're polluting the environment. And you have all these people saying, oh, you gotta stop it. They're going to shut down the capacity. And then when a war happens, then the security risk could be, well, we have no capacity to make steel. And everyone's going to be wondering, well, how do we let this happen? Well, you idiots blocked a deal that would have kept these plants open for 30, 40 more years, because a new hot strip mill can last up to 100 years, as we've seen. A new blast furnace can last up to 68 years, as we've seen in the past. And that was 1900s technology. Imagine how long they can last today. And this is what happens when you have a culmination of facts. You have a union that's controlled by a rival, that's looking for as much political power as possible, a declining steel market, which means that margins are tight, and then you have this other X factor of the election, where you have both parties trying to get votes, even though it makes no sense, because they'll vote either way. The people who work for these unions will make their own decision. And it's basically a lose-lose because, both parties set against it. So it's what political game are we playing? Now, there are some valid critiques to my argument, 100%, and I'd like to address some of them. You can make the argument that U.S. Steel themselves should have been more proactive in making sure the deal was getting done from their side. Making sure it happened quickly as possible. For whatever reason, Nippon and U.S. Steel didn't really finalize everything till, I think it was June of this year, 2024. And they didn't really submit everything to CYFIS that quickly. And looking back on it, if they did it pre-election cycle ramp-up, I think it probably goes through, because even though Nippon doesn't do that much due diligence as they would have done, for instance, having me work on a huge 400 different types of steel, throwing it through the joint venture, seeing the profitability of that, would that be an antitrust lawsuit violation? Those sorts of projects, maybe you skip over those and you just say, listen, we're just going to do the deal because we think it's going to be good. If you cut that due diligence time down, you probably get the deal done, in Q2 of 2024, but right before the election hits. And this is never a problem, and we still have, steel in Pittsburgh. The whole identity of the city is going to be erased, and no one cares. That's what's sad. It's just the culmination of effects of politicians and people wearing suits, getting greedy and screwing over the little man working his union job, who's going to be, laid off in 5-10 years because, the plant doesn't exist. And everyone says, well, these are threats that won't be backed up. Well, we've cut down plants in the past. Granite City, we shut down 2/3 of it in the last year, and everyone just forgets about that. And everyone's like, well, we shut that down while it was profitable, because we knew it wouldn't be profitable within a year. So you think these are empty threats? These are not empty threats whatsoever. Another critique people have is that U.S. Steel and Nippon weren't motivated themselves to work on this deal. I think that is a bad critique, because for the high-end executive level, anyone who owns stock, most employees own stock. You get paid in stock for your 401k. Executives get the bonuses in stock. they are going to be highly incentivized to make sure steel goes through, because, you know, their $20 shares have turned into $55 a share. Put that on scale, I mean, that's a couple $1,000,000 you can make off a deal. So, I mean, it's very important to them to make sure, you know, this stuff gets incentivized and done. 100%. So then moving on from that, from Nippon's side, they have a clause in their contract. They have to pay U.S. Steel $574 million if the deal doesn't go through, which is huge, absolutely huge, from the perspective of, like, if they have to pay us that money and they get nothing in return. That is particularly important to me because it showed that, like, Nippon really did care. They really wanted this to happen. And if you saw, like, how desperate they got, you know, paying, they wanted, if the deal went through, every employee would have got a $5,000 bonus, which I would have missed out on, which, you know, would have been unfortunate. And, you know, all the concessions they literally made a concession that if they shut down a plant, it'd have to be approved by the president. Just think about that. Like, you talk about, like, capitalistic in the free market. I mean, that is, like, almost state controlled at that point. Like, the business is making a decision and the president has to sign off on it as, like, an independent corporation that's owned by a foreign entity. That is unheard of to give that type of concession in a capitalistic market. So there was some, I mean, from the CIFA's perspective and then that perspective, I mean, those are two unprecedented events. That's why this whole thing is a complete and utter chaotic case study that honestly will be analyzed for decades and decades coming, because it is a complete anomaly in all sense of precedent and business logic whatsoever. And I guess the other valid critique is, well, you know, shouldn't you just have accepted the Cleveland-Cliffs bid and just, you know, hey, it could have gone through, it had the political capital to go through, you know, if you rubbed enough backs, you know. I still think, like, long term that would have had worse consequences than U.S. Steel just being independent by itself. And the reason is the synergies, those layoffs, the fact Cleveland-Cliffs has shut down their own plants in the last couple of years. No one likes to talk about that. Like, hilariously, Trump went and spoke at a plant and was like, hey, well, this plant won't get shut down when I'm president. And they shut down the plant like a year later after he was in office because he didn't protect the steel industry like he said he would. So, you know, stuff like that is pretty humorous to me personally. Also, a thing to mention is that $573 million. You can say, well, why doesn't U.S. Steel invest that and keep their plants alive? Well, that's just not enough money. And the fact of the matter is, with the prices of steel right now, without the protections that the market has, I mean, it's just going to keep getting worse and worse and worse. And because of their fixed union raises, I mean, U.S. Steel, unless they completely change their, you know, how they operate as a company, will just utterly fall apart. And it's been a slow, miserable death. That's sad to see because, you know, they built this city out of nothing. And it's kind of, in a way, like a full circle. You give to the earth what, you know, you gave out. You know, it'll all be reclaimed by nature sort of thing, because, you know, there won't be anything there just like it was 200 years ago, you know, and that's how that plan's going to be. And, you know, the people who live in Clarion, the people who live in Gary, the people who live in Troy, Michigan, people who live in Birmingham, Alabama, they'll all be without part of their community and part of their identity, because people in Washington, people that are in charge of a union, favored placating one person over justice. And that's kind of a shame, but, you know, it's kind of where we are in democracy. You know, it's Animal Farm, you know, all animals are equal, except some are more equal than others, and that's kind of the way democracy has evolved in the century, ever since, you know, the turn of the century, especially after the Patriot Act and, you know, more and more government intervention after, you know, 2008. You just see these sorts of things happen in ways that really doesn't benefit the long-term outlook for business being done in America from a manufacturing perspective. And that's very disheartening to see, because when you analyze failing and fluctuating economies like Japan's, Europe, China, all these economies have correlating traits. And the fact is, the manufacturing stalls, then the service industry stalls. And then when the service industry stalls, the government stalls, because it's a chain reaction of, okay, you lose the manufacturing base, so your low-level employees are out of work, your unskilled labor. Service employees lose their money because they don't have that base to help the unskilled labor, so they will fluctuate. Then the government loses money because they lose tax revenue, and when they lose tax revenue, they're already run inefficiently, so then the economy just starts going downhill. And then you will see the rise of societal problems, and that is basically what's been happening across the world. And it's all because, the guilt being placed on domestic manufacturing from, hey, you're not placating the unions, you're not placating to the environment. And, at some point, there's some sort of trade-off that needs to be made that says, hey, like, these people need to be able to operate at a considerable rate and margin to keep these jobs in-house, because at the end of the day, someone has to pay these people's salaries, and all you're doing is creating more and more problems for those people. And for what? I mean, there's really nothing to be gained from this, and it's just a scary trend that I've seen happen in other economies around the world. And, this deal kind of sets a precedent that, this will happen in America, and it's a very scary sight to see, because, this country was kind of built on industrialism, and we're seeing that not be the case at all anymore. And it'll just result in the higher and higher, societal decline and morality decline, and people will become more and more upset, and we'll see, maybe one day there will be change, but is that really what is going to happen? I don't know. It just comes into speculation, but I think it is kind of a play into the cause of the overall downtrend of what true liberty and principles have been applicable in the time period that we currently live in. So all in all, it was just a complete and utter train wreck of events that was all spurred on by, initially, the government wasn't going to placate, U.S. Steel rebuilding a union plant during COVID, which set off this train reaction of, hey, we can just completely change our business model to be profitable. And they looked really attractive. They were so attractive, in fact, there was an attempt at a hostile takeover that resulted in, geopolitical tensions from an election boiling over into, practicality and saving people's jobs. And, at some point, logic needs to dictate action. And that just wasn't the case here. And, I don't know what type of backroom deal or who got scratched on the back or who got paid off, but clearly U.S. Steel didn't do enough of it, Nippon Steel didn't do enough of it, and that's really upsetting to see that, logic and morality was cast out of the way for God only knows what reason. Yeah, so that is basically the U.S. Steel deal in its entirety, in a nutshell. I worked on it indirectly throughout my internship and my first job in FP&A commercial. Those were basically all the parts that come to mind. I mean, of course, there's other small things like, internal controls and reports and mechanisms telling Nippon, hey, this is what we're doing, how we do it, this is how we come profitability, is our metrics, that sort of thing. But Nippon didn't really, while they were trying to buy us, they didn't have any direct intervention into how we operated at any single level, from financial to operation, like the plant itself. They had no direct intervention or input on like where we would spend money, if we'd hire people, if we wouldn't hire. I mean, when the deal was announced, there was a hiring freeze for a bit, but I was able to circumvent that because I was rehired, like for my internship, so I was technically promoted within the company system, which was interesting. But, I mean, it was just a very bizarre time within America. And I think the major problem was that when people think of U.S. Steel, they think of the 1900 version of U.S. Steel, which is just not, it doesn't exist anymore. Like, U.S. Steel is not this conglomerate. Like, if U.S. Steel was renamed, you know, Mid-Atlantic Steel, which basically what it is now, the deal would have gone through. I mean, 100%. And there's no doubt in my mind. It's just because, you know, it had the legacy of Carnegie, Rockefeller, and Charles Schwab on it, that everyone and their mother thinks that this company needs to be protected at all costs from, you know, foreign adversaries, like it's, you know, a government company, but it's not. I mean, it's its own private company that's afforded the same rights as any other private business within America. So the fact of the matter is, you know, it is unconstitutional and unlawful, and and they said they will take legal action against the United States government. Let's think about how many times that has been successful. Not many times. It's unfortunate to see, but it's the reality of the situation. And I truly think that this will set the tone for foreign companies not to invest in America moving forward. And this will only hurt America moving forward. And I really can't think of a reason why blocking this deal would help America as a whole. Of course, blocking this deal makes sense if you're our competitors, because it makes us stronger. And if you want a worse steel industry in America, you want the steel not to go through. If you don't like American manufacturing, you don't want the steel to go through because there'll be less capacity. But if you're one of our customers, you want the steel to go through because it allows us to produce steel cheaper. It allows us to produce steel faster, greater. And it would have allowed U.S. Steel to produce more tons that are harder to make, like the automotive steel. And that's why all the automotive OEMs were very pro this deal, and a rare symbol of unity within the industry. I mean, they want a strong domestic steel manufacturing industry to support their needs so they can ramp up and ramp down. Of course, the employees wanted the deal to go through because it was kind of just a no-brainer from their perspective, and non-union or union. I mean, you saw the rallies they had, and you saw the influence. You know, this really made people upset and frustrated with, you know, the local and state and national government. You know, there's different reports on, you know, if Shapiro went to President Biden and had an emergency dinner and begged him not to to let the deal go through, which was pretty funny. If that's actually true and, you know, Biden snubbed them, that would, you know, kind of, that to me would be kind of a savage moment for President Biden to snub Shapiro like that. But, you know, there was some funny things, especially to come out of this deal, like the people reaction, like seeing how uneducated people were on commenting on the deal. And, you know, there was a lot of people, I do have to hand it to the press. The press was very, very favorable to U.S. Steel the entire time. They did not slander the deal whatsoever. They were very pro the deal, which is very rare to see. You know, like CNN, Wall Street Journal, Fox News didn't, but I would say the majority of media that is considered neutral or left-leaning was very pro this deal. And besides, you know, I didn't even really see a Fox News article actually bashing the deal. So I would say the majority of the media actually had this correctly pointed out. And if you looked at the private equity firms or the hedge funds or the massive institutional investors looking to invest in U.S. Steel at that time, you can see how their trading kind of reflects the reality of the situation. Like, from a practicality standpoint, this was just such a no-brainer. And seeing the market sentiment get completely destroyed by the government, I mean, that is something that is just so uncapitalistic and so counterintuitive to the principles this nation was founded on. It is very upsetting to see as an investor. And, it's just a good warning to anyone who puts money in the American stock market that, the government can really just ruin your life at any single time and doesn't care. Really does not care. And what will be consequences of this immediately are that within 5-10 years, people will lose their jobs. I mean, there's no question about that at U.S. Steel. Domestic, hardworking, union people will lose their jobs, and people in corporate will lose their jobs as well. And the capacity for steel in America will be lower. So when there's a time where duty calls and we need it, and everyone's going to be looking over their shoulder of, where do we find it? Well, this is why. Thank you for listening to my beautiful rant. Wish you all a beautiful, wonderful day. God bless.